need to put support behind. And I appreciate all the economic development directors that wrote letters this week. Then on Senate Bill 216, that's the high-cost infrastructure bill. And this is something that the Governor's Rural Partnership Board has been championing for the last 3 years. Senator Okerlund has been our Senate sponsor and has done a superb job. Several of us attended the last House Committee meeting yesterday, and it got, you know, all across the board, it's had unanimous support from Democrat and Republican, rural and urban. This is something that everybody supports because it helps large businesses overcome the hurdle of high infrastructure costs in rural Utah. But the Wasatch Front representatives now understand that this would help reduce population, traffic, air pollution. So I think the time has come for this bill, and we feel very confident that this one will go through. Another one is HB 323. We were made aware of this a few days ago, and this is money that might become available for counties to do land use planning. And some of you may have a land use plan. They may be needing update, but this will be if this goes through, this will be an opportunity to get funding to make sure that that's done. And then let's see. What was the other one that you added, the TMPF? Dan, do you want to go over that one?
Tourism Marketing Performance Fund. So that's the bill that's being done by the Office of Tourism that allows rural areas of the state to do marketing in states. So that's that one. So in the past, the TMPF gave funds for companies or areas to market their area outside of the states, to outside potential tourists outside the state. So with this change, it allows the more rural areas of the states to market their area within the state. So you can put up a billboard on the Wasatch Front using TMPF money. And so that one also has passed both the House and the Senate. And that one is just waiting for the governor's signature. This was last week that the last update I got from that.
So one of the things we realized, we've already started planning for next year. In fact, the GRPB Executive Board is hoping to have a meeting within the next couple of weeks. We need to make sure that we have our strategic goals in mind so that we know what legislation we need to support those goals. And we would invite all economic development directors to contact the GRPB board members in their area, let them know what's important to them as far as legislation and things like that, and then I'm sure the GRPB will have a strategy and we'll make sure that that gets out to everyone for review and comment. And I think by next year, if we can have our bills ready next year by the Rural Summit in August so that we can jump right in during the interim committee process, I think we'll have some, we've had success this year, but we want to continue that, that direction. Right now, we have a wonderful window of time where everybody up on the Hill wants to be a part of rural Utah and the success of economic development in rural Utah, even if their bills are only marginally affecting rural Utah. They're mentioning that because right now it's cool to be rural. I think it's helped to have a lieutenant governor that is rural, and it's our opportunity to educate all of the legislators what it means in rural Utah and what we need to grow. So I think that's probably, we've covered the legislative issues. Cole, are you ready?
I am.
Before that, Michelle just had a comment. Michelle Coleman had a comment. You have a list of GRPB representatives or board members that are near to your area. We've got a list of GRPB members on our website. It needs to be updated because of the changes that we're making now that Linda is with Go and things like that. So we do have that on our website. And so if you're wondering who your nearest JRPB member is, you can check that out and find that out. Then Eden Johnson, when will the enterprise zone amendments be effective? So in the case that it does pass the Senate and is signed by the governor, it will be effective May 11th as well. So Box Elder County can start taking advantage of both the rural fast track changes and the enterprise zone changes starting May 11th, in the case that it does pass. We're crossing our fingers that it does.
Well, it looks like somebody put up a link to the GRPB members. Thank you for putting that up.
Yeah, like I said, it's going to be updated here in the next couple months once we get new board members on board. But that is where it will be. All right, Cole, are you there?
I am.
All right, I'm going to change it over to you. All right, Cole, so now you just show your screen. There it is.
Are we live?
Yeah.
Wonderful. Well, thank you so much this morning for this opportunity to speak with you. I would also like to extend my congratulations to Linda. I had the pleasure of meeting with her last week. GoEd as a team is very excited to have her. We're looking forward to seeing what great work she can do. I would also like to thank Dan and Jake. I've had the pleasure of working with these two gentlemen. They're great individuals. They've done a great job in trying to help me market and get the message of Avenue H out to our rural Utah communities, and for that I can't thank them enough. I would also like to thank each of you this morning for your time and your interest. I hope that the information I share will be meaningful, and hopefully it'll help you understand what options are available to Utah's small businesses, whether they be urban or rural, when it comes to offering employer-sponsored health benefits. So I think it's really important to understand any organization or agency's mission, and I've looked very hard at trying to find a way to best sum up what Avenue H is trying to accomplish. In a sense, our goal is to provide Utah small businesses with opportunities to afford health insurance. We do this two ways. The first is we allow the employer to control costs. We also allow the employer to expand health insurance options on behalf of their employees. Being able to control costs and providing options is kind of a new way of thinking about and accessing health insurance. And as we go throughout the presentation, I'm going to clarify those 2 points. First, what is Avenue H? For those of you that do not know, we are a health insurance marketplace for small businesses within the state of Utah. We actually precede the Affordable Care Act. That's a question we get and get all the time. And in doing so, we've got a unique ability as a Utah-based marketplace to meet the specific needs and preferences of Utah small businesses. Avenue H is part of the GoEd team, so I do work with the rural development, and in fact we share on-office space essentially just down the hall from one another. We are federally certified as the state-based exchange, so even though we precede the Affordable Care Act, in order to comply with the Affordable Care Act's mandates of the individual and small group market, we became credentialed to represent the state of Utah with respect to that small business health insurance marketplace. We are a one-stop shop for medical, dental, and health savings benefits. So this is a nice, easy, online, convenient way for small businesses and their employees to access all of those benefits and to manage them in one specific location. And last but certainly not least, we are a competitive marketplace environment. Regardless of where you stand on the topic of healthcare or healthcare reform, one of the things I think we can all agree is that in order to control costs and to provide expanded choice, we need to engage the individual consumer, and we need each individual to understand how and when and why to utilize their health insurance and the benefits that they provide. in this type of marketplace environment, we allow group health insurance to be purchased at an individual level, meaning that a carrier doesn't need to just meet the needs of a small business and all of its employees, but each individual carrier now must meet the needs of each small business and every individual employee within it. We hope now and in the long run that's going to help make the environment more competitive, and it's going to help cut costs in the process. So who's eligible? Who can participate with Avenue H? There's really 3 eligibility criteria and 1 participation criteria I'd like to cover with you today. First is that your business must be located within the state of Utah. Now that means you have to be domiciled here in the state of Utah, but you can have state employees. In fact, you can have up to 50% of your full-time eligible employees residing outside the state of Utah, and there are health insurance options for those out-of-state employees. As a small business, you have to have less than 50 full-time eligible employees. And in the state of Utah, we define full-time as those working 30 or more hours per week in a given quarter. Those employees must be W-2 wage earners or common law employees. So if you're a small business that contracts with 1099 independent employees, unfortunately at this time Avenue H is not going to be the best fit for you. Of those employees who are eligible, they all must be offered an opportunity to access their health insurance benefits through Avenue H. So there again, you cannot do a management carve-out, you cannot selectively offer coverage, you have to make it available for all of your full-time eligible employees. And last but certainly not least, from a participation perspective, of those full-time eligible employees, 75% of them must participate with Avenue H, and that excludes those with a valid waiver. In other words, if you're a small employer with 10 employees, and all of those employees are working 30 more hours a week, so they are eligible to participate with Avenue H, you offer benefits to all of those 10 employees, but let's say 5 of them have health insurance through either a spouse, through their parents, or through another governmental entity. Those individuals do not count towards your 75% participation. So in this example, you would only have to have 75% of those remaining 5 employees that did not have access to health insurance participate with Avenue H. There is an exception to this rule, and that occurs every January 1st of any calendar year, where groups can waive participation requirements and come on and participate with Avenue H without having to meet that 75%. Again, that is only for groups looking to enroll with an effective date of January 1st of any calendar year. So as a small business, we want to stress that there are options available. We certainly don't want to think nor assume that we are the only option or the best option in some circumstances. So if you're a small employer, you have really 2 options. You can either offer health insurance or you can not offer health insurance. Because we're talking about small employers, there is no penalty for employers within that small group definition to offer employees health insurance benefits. However, should they decide to offer, they've got 3 options. They can either go direct to the commercial market, and by that I mean select one of the insurance carriers participating within the state of Utah, so for example, Select Health. But when you do select Select Health, you only get their network and their plans. And if you're an employer, you get a fixed cost that is tied to a percentage of the employee's monthly premium. In most cases, that ranges between 50 to 75%. You can also do what's called self-insure. Many local small businesses don't take advantage of this opportunity because it doesn't necessarily fit, nor is it deemed a viable option for small employers. This is typically something we see in the mid-sized to large market. And your last option is you can purchase or access your health insurance through Avenue H, where again we offer expanded employee choice and a multitude of different carriers and networks to provide ultimate flexibility. Or you cannot offer health insurance. And if you do choose to go down that road, you again have 3 options. You can encourage your individual employees to select and purchase an individual health insurance plan through healthcare.gov or Obamacare. Your individual employees and their families can go direct to the commercial market, or they, again, as we mentioned earlier, can access group coverage through either a spouse or a parent or another entity. So the next 3 slides I'm going to show you are really the bread and butter of Avenue H, and again, really what differentiates us from going direct. When I spoke to you about going direct or selecting a single insurance carrier, one of the things I touched on was the fact that you, as an employer, are tied to a fixed percentage of that single employee monthly premium. Now, we like to stress that that's a percentage because rates in the insurance market, at least historically, have been trending upward for years and years and years. If you're meeting 50% of an obligation today, there's a good chance that 50% is going to increase next year when rates are reevaluated and posted. So Avenue H decides to help employers offer health insurance by controlling costs, thus making it more affordable. The way we go about doing that is through a defined contribution. This allows the small employer to offer a health benefit through a flat dollar amount, not a fixed percentage. So the employer gets to decide what they're willing to contribute or what their bottom line will allow them to contribute, thus making it affordable and thus helping them control costs. There is no minimum amount required, meaning that of the more than 618 groups currently participating with Avenue H statewide, we do have some employers that still want to offer group health insurance or access to group health insurance and make a $0 contribution. That is possible in the Avenue H model. Now, as you can tell, our 4th bullet point, in spite of the fact that there is no minimum amount required, the 3-year average for Avenue H employers is $435 per employee per month. So even when we give employers complete flexibility through a defined flat dollar contribution, they're still proving to be very generous in terms of what they're willing to contribute on behalf of their employees and their families. This also allows the small business owner to have predictability within their budget. In other words, because we're talking about flat dollar and not a fixed percentage, your budget is going to be the same month after month, and it can be year after year. So you can literally control your costs and still offer health insurance benefits. And last, but certainly not least, this preserves the benefit of offering benefits on a pre-tax basis. This is significant for both employer and employee, and with respect to the individual market, because some of our small businesses decide that it's a better fit to send their employees into the individual market. All of those benefits are purchased on a post-tax basis. So when you're trying to determine cost and what's really going to work best for you and for your employees, please take into consideration some of these bullet points, but perhaps most importantly, the preservation of those pre-tax benefits. What does this then mean to the employee? Well, once the employer has decided what their flat dollar contribution is going to be, each individual eligible employee will then take that money, enter avenueh.com, and select from 75 different medical plans offered through 3 independent insurance carriers, Select Health, United Healthcare, and Arches. All of these private insurance entities offer ACA compliant plans, and they allow the employer to have the limited ability to dictate what plan and what network is going to work best for his or her employees, thus empowering the individual employee themselves to find the plan that works best for their needs, their preferences, and their budget. We also offer health savings account options, so it's possible for individual employees to select a health savings account compatible insurance plan. And we also offer 6 different dental insurers offering 48 different dental plans. Again, complete employee choice. In other words, you find the plan that works best for you. Don't let your employer have to make that decision for you. Oftentimes we get questions about how do we allow or how do we help individual employees make the best selection possible. So on the right-hand side of the screen, you can see that Avenue H does offer, as part of our enrollment system, decision support tools, plan comparison tools, and provider searches. If you've never engaged Avenue H before, I think one of the best examples we can offer is something like a Travelocity or an Expedia.com, where literally the employer would go in, or the employee, excuse me, would go in. They would determine who their primary care physicians were, who their specialists are, what medical facility or facilities they have a preference towards. And then once that information has been entered into our system, they simply hit the search function and it narrows down those 75 plans into those half a dozen plans that tailor to those specific needs and preferences. At which point the employee then can just simply make a decision based on price and based on the defined contribution that's been offered by their employer. So we really allow an educated, informed decision to take place at the individual employee level. Last but certainly not least is the administrative ease that we believe Avenue H provides. There are several different ways, as you can see, that we go about simplifying this process for both employer and employee. To consolidate this portion of the presentation, I want to focus on just maybe one or two of these. Again, you're allowed to preserve those pre-tax benefits, so at the employer level you just simply withhold the employee contribution via payroll like you're currently doing now if you're offering those pre-tax benefits. Avenue H does offer a single monthly consolidated invoice, meaning that if you have individual employees that select different carriers and different plans, rather than having to pay up to 2 or 3 different invoices with different due dates on different times, you just get one single consolidated invoice that you pay to Avenue H, and then Avenue H disperses those funds accordingly to each of the participating carriers within that group plan. HSA options are integrated as part of the enrollment. Both employer and employee can make contributions there. And withdrawals can be made via ACH withdrawal on the 26th of each month or via credit card. There is an opportunity for small employers for at least this calendar year, and there's a chance beyond this calendar year, to receive up to a 50% tax credit, that is for-profit entities, or a 35% tax credit for nonprofit entities with respect to the percentage of the employer contribution paid on behalf of a single employee on a monthly basis. The qualifications for being able to participate with this federal tax credit are a little different than participating with Avenue H. As you can see, it's 25 or fewer full-time equivalent employees. The average annual wages for those 25 or fewer employees, minus the owner or any member of the owner's family, must be less than $50,000. And the employee must contribute at minimum 50% of the single employee monthly coverage. So again, a little bit different, but there are opportunities, and there are many small employers where this would work, and it has worked. One thing I'd like to stress is that that is a tax credit of up to 50% or 35%, meaning depending on what your average annual wages for all of those eligible employees are, you're going to get a different percentage. So if your average salary is $25,000, you're going to get significantly more in a tax credit than you would if your average employee wage was $45,000. This tax credit is only available through Avenue H. So things to consider. These are the top 5 questions we get most often, so I thought I'd address them quickly. Plans and rates are the same in or outside the marketplace. So we oftentimes get people asking, if I just go direct with Select Health or United Healthcare or with Arches, are my plans going to be cheaper or more expensive? The answer is they're the same. Therefore, we allow the employer to have that defined contribution, which is what ultimately makes health insurance more affordable through Avenue H because they can control their costs. Carriers pay broker commissions the same in or outside the marketplace. Because we are completely dependent and reliant upon brokers presenting Avenue H to their clients, oftentimes we're asked, well, do I get paid the same amount in or outside the market? The answer there, again, is the same, meaning there is no additional incentive for the broker to go one way or another. All rates include the administrative fee as found within the small business market. So if you're a small business owner and you're purchasing health insurance through the commercial market or through Avenue H, you're going to get the exact same cost because the administrative fee is spread throughout the entire small group market, regardless of where you access or purchase those benefits. Groups participating with Avenue H renew about 93% of the time. So once employers come on, you can see they typically stay. And certainly last but not least, employer-sponsored health benefits assist with peace of mind for the employer and the employee, but most importantly, they help with recruitment and retention, especially for those highly skilled employees who are looking to make a difference for you as you look to grow your business. So my last slide in summation is why Avenue H? Well, we offer the flexible defined contribution, flat dollar, not fixed percentage, full employee choice. Employees choose their carrier, their plan, their network, and their cost. Administrative ease, small employer premium tax credit. Groups can enroll anytime throughout the year, and we do preserve those pre-tax benefits. That's my brief presentation on behalf of Avenue H. If you guys have any questions or concerns, I'm happy to address those. If not, I appreciate your time and your interest, and I wish you good luck.
Yeah, Cole, we had one question Linda asked, actually. Does this small employer tax credit expire?
Yeah, so it's a good question, and right now there is some uncertainty, Linda. This is a federal program, so it is not tied to the Utah legislature. However, there is some uncertainty at the federal level with respect to how long employers could take advantage of this tax credit. What we do know is that employers could take advantage of it for up to 2 consecutive years, meaning that if an employer came on to Avenue H in 2015, could they take advantage of that in 2015 or 2016? Or, since current legislation states that that's set to expire on January 1st of 2016, does that limit them to only using it for 2015? We are currently talking with the feds, trying to seek further clarification, in particular with the IRS, but right now that's all we know and the only clarification we've received.
Thank you.
You're welcome. Are there any further questions? Well, thank you again and have a great day.
All right, thanks. Cole, are you still on?
I am, yes.
There's one other question. Michelle Coleman from Wayne County. She asked, is there going to be someone that is going to be a referral for us to send our businesses to? So I guess she's asking if there's who in your office would be the point of contact to refer businesses to you, to Avenue 8.
So a couple of things, Michelle. First and foremost, health insurance brokers are probably the best way in which to access health insurance benefits regardless of the avenue you pursue. However, you have to be a credentialed Avenue H broker to write business or put business through Avenue H. Currently, there are hundreds of brokers throughout the state that are credentialed to do this. However, if you identify an agency that would like to take advantage or at least explore the possibilities of Avenue H, they can either visit our website at www.avenueh.com. There they can access, again, some information about Avenue H, and they can also find or search for agents available within a geographical location. If that does not help, or if they're seeking further information, please feel free to have them contact me directly. My name is Cole Hansen. I work for Avenue H, and they can either call me at 801-949-137 or email me at chansen, Hansen, @utah.gov.
All right, thanks a lot, Cole.
You bet. Thank you.
Rick, are you on?
Yes, I am.
And now, are you on the phone or are you on your computer?
I'm on the phone. Well, I've got the computer ready to roll with our presentation.
Okay, so I can switch you over to being the presenter, and then we can see your screen so you can do your presentation.
Thank you. While that's coming up, let me just take a minute. Our company is called Professional Funding, and what we do is we put together financing in non-traditional ways, in other words, ways outside of what a bank would do for businesses. And we'll go through a couple things here. Our focus is non-traditional loans, which are loans that are through either private banks or private lenders. Now, we are not a venture capital firm, so what we put together is debt for companies that are growing. And so that the loans are created, and we'll go into that here in just a minute. The types of loans that we are varied, and we'll list a few of them here. First of all, purchase order financing, which is where a company has a large purchase order for whatever goods it is that they may be manufacturing, but they don't have the goods, they don't have the finances to be able to buy all the parts to be able to do that. And so that's where purchase order funding will come in. We can fund a purchase order for them to go for it. An ABL, which is an asset-based loan, which is based upon a company's assets, which could be the receivables, could be inventory, it could be real estate, any number of things. Typically, for a company that may be just a little older, maybe a company that would be at least 2 years old and older to be able to do that. Royalty funding, which is fairly unique and fairly new as far as outside of what we would consider to be royalty, starting with, say, the recording artists, where a recording artist would sell off or would borrow against a song that they had, and it has evolved into oil industry and gold and those sorts of things. But we also do royalty financing, and it's a good fit many times for a technology company, where, as an example, we've got a client that we've just put together some financing for, where they do web development and do an excellent job of it, but it wasn't something where they could go to the bank and be able to borrow money. There weren't assets to be able to borrow against. They had computers, they had servers, they had desks, and they needed to be able to borrow a large amount of money. But that's a unique other solution. Factoring, which probably many of you are familiar with, which is just the selling of the receivables of the company. Our bank partner lending is something that we focus in on, and that is that we work with banks because there's a situation where the bank may not be able to do a loan for a company, yet they want to be able to continue the banking relationship. So the banks will refer people to us because they want to see the company be able to grow. And in many cases, we're putting together financing that would be a bridge loan, so to speak. It would be something to take care of them for a year or a couple of years and be able to go back to the bank then. Our solutions will be more expensive than a bank because we're taking on higher risk loans. We don't disturb the deposit relationship they have. The client continues on with the bank. So there are some categories where we can't put together financing. I'll just mention that quickly, that we've got startups, retail, or SIN industries. SIN industries would be like pornography stores or liquor stores, things like that. But those are areas where we don't get involved in lending. But areas we do, yes, categories be large. We typically than that. We don't deal with, I mean, we deal with manufacturers on a regular basis. It's normally a very good fit for us. Distribution companies, I'm getting a feedback saying unmuted. I'm not sure if that's for me or someone else. Anyway, we have some of the bank turndowns are ones that we will work with, which is if a company is rebuilding, they've had kind of a slide in their sales, there's been something that's caused them to have to redo whatever they're doing, to retool themselves, maybe a corporation bought out. Then we have bank turndowns, and this happens to be with rapid growth companies. And so this is probably the most common where we deal in, where the business has had rapid growth, but the company isn't able to meet the needs of their customers because they're not able to access any more capital for the bank. You've got situations where a bank loves what the company's doing, but where they have a real uptick and are moving forward in their sales in a very aggressive way, and they have a line of credit perhaps with the bank, and the bank is saying, we've got to draw a line here, we need to see things stabilize, but we don't want to lose you. And so those are the kind of companies that we quite often are working with to help them to be able to grow. And there again, it may be something that will only be something that will take care of them for a year or two. So some of the other things we talked about, lending, export finance, equipment loans are things we put together quite often. Work in progress, which is pretty much the same as purchase order funding. We can do loans of all sizes. We've done many, many millions of dollars of loans the length of time we've been in business. By the way, we're located in St. George. So if there's a larger corporation, we can do very large loans and have done very large loans. We also are really quite excited about the new market tax credit program, and I suppose all of you have information with regards to that and know what areas that will be a fit and what areas it won't be a fit. But we spent a lot of time, spent a fair amount of time with DeLynn in his office and talking about this in the very beginning days, and we are continuing to work on putting together financing with companies that are a good fit in that area. Companies that reach their bank loan limit, that's probably the #1 area. Our focus at this time, we really would like to focus, particularly in the next 12 months, on companies that are in rural parts of Utah. We see that as being so underserved in various ways, but what we would like to do is be able to get an assistance to those companies that need capital, that aren't able to get it. We would love a phone call. We'd love to be able to sit down with those people, or at least have a conversation, and to be able to explain what we can do. And there are a lot of things that we can do that we can put together. So with that, kind of gone through things here fairly quickly, but just wanted to let you know that we've also sent out to everyone, I believe it's everyone, a brochure or an envelope with 3 brochures and a business card with some information basically recapping what we've covered here. We'll also, we're back and forth through northern Utah on a regular basis, and I will be going up to northern Utah the end of this week, first part of next week, and if there's anyone we can stop and answer any questions to, we'd be happy to. And before I forget, I certainly want to thank Jank Hardman for inviting us to be able to take a few minutes and let you know some of the things that we can do to help companies in rural Utah. Any questions?
Yeah, thanks a lot, Rick. We had a couple of questions here on the chats. One was by Wes Curtis. Rick, can you hear me?
Yeah, I can.
Okay.
Go right ahead.
First question from Wes Curtis. How do the interest rates compare to commercial lenders, or do you typically take an equity position?
In a royalty lending situation, that's probably the only one where there would be a small equity position, but we normally are not involved with anything in terms of equity. It's debt. And yeah, as far as let's see what let's see if I can read the question here. My eyes are giving out on me. Anyway, so we typically will do all kinds of commercial businesses, and we'll do nonprofits as well. Interest rates are going to be more expensive on the kind of solutions that we put together, because if a business can find less expensive money from a bank, that's obviously where they're going to go. And in most cases, like I say, we're going to be a bridge. It's a situation where the company needs to be able to get more money. The bank has turned them down. And it's not that we're taking on a company that's about to go bankrupt. You know, keep in mind, we're looking for viable companies. But yes, we can help finance all different kinds of companies, but the interest rates will typically be higher than what a bank would be. And it depends on the risk.
All right, do I have any other questions?
Rick, this is Jake. You did say that you do work with nonprofits then?
Yes. It isn't something that we do on a regular basis, but yes, we do deal with nonprofits. For the most part, we're dealing with corporations, but yes.
Well, I'll just throw in my little 2 cents too. I kind of tested Rick out a couple of weeks ago, and I sent him a company from Wayne County, and he did a really good job of helping them out. And so if any of you lose Rick's contact information or don't have it, just contact me, and I'll put you in contact with Rick, and he's more than willing to help out where he can. So I think this will be a great program for a lot of businesses in rural Utah.
Well, thank you, Jake. I owe you a big milkshake for that. But we do cover a lot of different industries. It could be healthcare, it could be hospitals, nursing homes, you name a business, and in many cases we do cover those industries other than the few that were listed here. But we would love to be able to help companies in rural Utah. We know that there are companies that are underserved. And I'll also mention to you that many times you have a situation where you may have a large employer. You may think that they're in great shape, but if that company is growing aggressively, you may find that they're not able to get the financing that they need to handle the growth that they want to have. And that's where we really step in, which of course means more jobs. Anyway, that's all we've got. Unless there are any other questions, we sure appreciate this opportunity and wish you all the best and look forward to working with you in the future.
All right, thanks a lot, Rick.
Thank
you. We're almost out of time. If you guys have any other questions, be sure to reach out to us. We can get those questions over to Rick to get answered for you. Same thing with Cole Hansen from Avenue H. If you have questions, we can give you the contact information. All right, Jake, are you ready to go?
That's me. I am ready. That's me.
Do you want me to give you the presenter's baton?
Yeah, that's fine.
All right. All right, so you're now the presenter.
Perfect. Can you see my screen?
Yep.
Great. So we were in 6 County AOG last week, and we were discussing, well, a lot of things, but the resort community came up. The resort community tax came up in that discussion, and so I thought I would just provide some quick information. Linda wanted me to provide some quick information about what this tax is and who can use it and for what purposes. So this will be really quick. More than anything, I just wanted to give you especially that code. So if you write down that Utah code, you can actually look up this legislation, see this code, and learn more about it. And I'll just kind of give you the brief details, and then if you feel like it's something you would be interested in, then we can talk more, and you can also just look this up on your own. So what this is it's a tax it's similar to a TRT, but it's used in conjunction with other taxes. So it's an additional tax to your sales and use in TRT taxes that a city would implement. Now, in order to be considered a resort community, your transient room capacity has to be greater than or equal to 66% of your permanent census population. And we'll talk about what transient room capacity means later on, but if you have basically more tourist rooms in your town, up to 66% of your census population, you can impose a sales tax of up to 1.1%. Now, right now there are 16 cities in Utah that are, at least that I know of, that are using this tax. Most of them are either 1% or 1.1% that they add on. Now, the types of transactions that can be used for and that tax is imposed on is found in that next code in 5912-103. So if you look that up, that talks about your sales and use taxes where this could be implemented. Now, in addition to the the 1.1%. If you want to, you can also add an additional 0.5%. So it's the same qualifications. Your transient room capacity has to be 66% or more of the permanent census population. And if that's the case, you add what's called an additional resort community sales tax that is 0.5%. Now, I would say about half of those 16 cities that do the resort community tax also include this additional resort community tax of 0.5%. So total, they can get up to 1.6% in tax. Now, what a transient room capacity is, how they define that is in these 4 different areas. First is high occupancy lodging like hostels. Next is recreational lodging, so you can include campgrounds as long as they've got water, sewer, electricity, and RV parks. It also can be counted towards that room capacity. You have special lodging, which is pretty much exactly what it is. If you've got some type of special situation that you have to pretty much prove that it's a transient room, you can do that. And then standard lodging, which is your normal hotels, motels, bed and breakfast, condos that are used for rental for, in the case of condominiums, if they're typically rented out for less than 30 days, that's when they would be considered a transient room capacity. So I just wanted to kind of briefly bring that to everybody's attention. Write down that code if you're interested. It's something that we can look at more. And obviously the code talks about the process and all the different things that need to take place to implement that tax. So that's all I have, Dan. If anybody has any questions, give me a call later on and we can talk about this offline.
All right, thanks, Jake. That is it for today. We do have some calendar items and other items. Linda, do you want to, anything you want to discuss on that real quick? Sorry, go ahead again, Linda. Sorry.
Okay. Dan is going to talk to UAC and see if they're okay with us joining them again next year, and it sounds like we will, but we just need to finalize that. But if you'll tentatively put January 29th down on your calendars. And then also, the GoEd board has added, or will have, a rural member very soon. We'll have a member of the executive GRPV committee will be attending that board meeting once a month. And they're inviting rural commissioners to elected officials that have economic development opportunities or challenges that they want to present to the board. We're hoping to get a list of possibilities and put the most timely ones in front of this board. This is a fantastic opportunity for rural to have more influence on what happens at the Governor's Office of Economic Development. So please let me know, or Dan or Jake, if your county has some issues that need to be brought to the board. And that's it.
All right, 9:31. That's not too bad. Thanks a lot to everyone for joining us. We had 27 attendees today, so that's great. Our next one will be next month. Not quite sure of the date yet. Did we decide on a date for that one? April 14th, I think we said, the second Tuesday in April, but we'll be sending out a reminder.
Yeah, April 14th is the one that we've scheduled.
Okay. Yeah, so April 14th is the next one. Once we get closer to that date, I'll send out the go-to-meeting information and the reminder. So thanks to everyone for joining us, and have a great week.